good morning, good afternoon, good evening, from whichever part of the world you are watching us. We bring to you Fintech Pioneers yet again today. I am Bhavin Shah, your host, here to talk to you about some amazing stories from the world of Fintech, bringing some great thought leaders in the Fintech world who are shaping this industry for us globally. One such amazing person today we have here is Michele Ferrario, the CEO and one of the co-founders of the very famous investment company Stashaway. He's going to share with us some amazing insights about what he thinks of fintech world, where fintech is going to move forward, and how he sees that changing the global financial system. So on that note, I welcome Michele. If you can, Michele, welcome to Fintech Pioneers. Over to you. If you can simply tell us a bit more about yourself.
Thank you for having me. So as you mentioned, I am the co-founder and CEO of a company called Stashaway. We are the largest digital wealth manager in Southeast Asia and the Middle East. We've been building the company for the last 5 years. We have announced earlier this year that we manage more than $1 billion and raised capital from the likes of Sequoia, Fidelity's venture capital, Eight Roads, and a few other institutional investors. We have launched in the Middle East in the last few months, and we see a lot of a big opportunity there. So happy to think about, talk to you about, how I see the world and how I see technology potentially changing many parts of the financial services system.
Awesome. Michele, a bit more about yourself. What got you to something like this? Where did you start? Are you a technologist? Are you a financial services person? What got you here? What's your journey?
I'm a business guy, I would say. I spent half of my career in and around financial services and half building consumer internet companies. I started at McKinsey, working mostly with the banks in Italy, where I'm from, then in the US. Then I was an investor, a private equity investor for a few years. And then for the last 12 years now, I've been building consumer internet companies. First, within a group called Rocket Internet. I founded Rocket Italy, launched a couple of companies there. Then I did Pakistan, so I launched Rocket Pakistan. I've launched 3 companies in Pakistan. And then I was the group CEO of a company built by Rocket called Zalora. It's a fashion e-commerce operating in Southeast Asia. I was the group CEO for around 4 years. And then 5 years ago, I decided to leave Zalora and Rocket. I met my 2 co-founders, and together we started what then became Stashaway. So Stashaway really is the synthesis of what I've done in the kind of 2 halves of my previous career, financial services and consumer internet. And the idea responded to an issue I found myself as I was a CEO of a company in Singapore, decently paid, saving money, and I, having the challenge of what to do with my savings, because I thought that the banks were doing a terrible job at trying to help me, or better said, they were doing a great job at trying to make money out of my money, which I didn't think was the right way to do it. And so I thought there must be a better way to help first me and then other people manage their savings.
Look, I have to say Rocket Internet is quite famous across the emerging markets, especially in Middle East and in Asia. There are a lot of Rocket alumni who have now formed amazing companies in the region. So look, great to have you on board. With that, let's start with one of our first questions. How do you see the digital space evolving in the financial services world?
Look, I don't think there's going to be a financial services world without digital. So I think that I don't like the word fintech, because I don't think there's going to be any fin without tech. And to be honest, we're already there today. Yes, of course, the traditional players still have a lot of distribution happening in a traditional way, but they all have, every player has been forced and to invest a lot in digital onboarding and digital management. So I think nobody under the age of 70 today wants to go to a bank's branch to do anything. Everybody would prefer and wants to do it from a mobile phone or from a computer. And I think for the most part, this is possible. I think we're now starting the next phase, which is how do you use this technology to reduce the overall cost, improve overall service. So it's not just bringing the same experience from offline to online, but it's also how you use better technologies to reduce cost, improve personalization, improve level of service.
But Michele, help me understand this. So what I understand is you're saying that we are moving from the world of UX, UI, and slowly moving towards the world of efficiency, where perhaps there's a long-term value that can be seen. So would you essentially see that the world of UX UI has a limited growth? There's only a limited population which is moving towards that, and then the wider benefit needs to come in?
No, I think UX remains at the core of every service. And I think about UX in a very broad way. To me, user experience is not just the user experience on the app. I'll give you an example. At Stashaway, we make a gigantic effort to make sure that our customer experience team, our support center, is very fast in replying to clients. So if you pick up the phone and call our support center, we respond in less than 8 seconds. Now, yes, is there a lot of technology there? A little bit in the way we manage, the call center. But to be honest, it's not game changing. What is game changing there is putting the user experience at the center in a very broad sense. So I don't think that user experience is something that you can not think about. I think it's very key. What I'm saying is that part of a normal, a decent user experience online is now default. Like you cannot not have it. And so now I think that the question is, how do you bring it to the next level? This is true for all players.
Awesome. And tell us a bit more about your company, Stashaway, and how does it actually stand out in the world of fintech?
So we make building wealth very simple and cost effective. The way we, some of the phrases we've used along, across time has been, investing that makes sense, or invested the way we want it. We want it for ourselves. So that's the way we think about it. And there are kind of 3 pillars to it: is to make it simple and transparent, first pillar, and cost effective, second pillar, to invest intelligently, third pillar. So there is a lot of effort in the third bucket, which is make sure that we provide very sophisticated investing advice and investment management services to our clients. But there's also a lot of investments in making it super cost effective, so reducing cost, and in making it super simple to use and transparent. So far, we've been live in Singapore for 4 years and have done very well. The reason why we grew so fast is that we gave, the people appreciated the simplicity of the platform, the fact that obviously we reduce fees, but at the same time, most importantly, I think they appreciated the fact that we help people increase significantly their net returns, and so do more with their money. The core product is a set of portfolios that enable people to get diversified exposure to different asset classes. So let's say you want to build your retirement portfolio because you're now starting to think about it. Then, in a few clicks, you can build a portfolio that will have at the right risk level for who you are and where you are in your life. And inside that portfolio, you might have exposure to North American equities, or to Chinese equities, or to long-term US bonds, or maybe emerging market bonds, or convertible bonds, real estate through REITs, gold, etc., etc. So you'll have, in a few clicks, a very diversified exposure that is managed professionally. Because at the end of the game, when people think about investing, everybody think about stock picking. Do I invest in Amazon or Google? And that's what we like to talk about when we meet our friends with a beer. But in reality, that decision actually influences a very small part of your different returns. The biggest decision is how do you allocate your assets? How much money you put in North American equities versus long-term bonds versus Asian equities versus emerging market, et cetera, and that's what our platform does out of the box. It enables people to build professionally built and scientifically managed asset allocation structure that target the risk level that is appropriate for you.
Just a follow-up questions on that, right? I would like to understand, how was your journey? Because you have been in this journey for 4 years, right? 4 years back, the acceptance for the word fintech was very low to what it is today. And what we have seen, at least in the industry, which you and I are both from, right? Financial services, we have seen this wave where first the banks said there's nothing called fintech and we don't like them, we don't accept them. Right. And then slowly came a time when they started accepting that, yes, fintechs are and shall probably become an integral part of the industry going forward. And now probably they are just accepting it full embracingly. So how has been your journey on acceptance of what you offer as a company not just by clients, but every single participant in the ecosystem?
Look, the clients have been the very first one to jump on board, to be honest. And thanks to that, and everybody else jumped on board. The regulators, I have to say, have been actually quite open. So, because obviously we couldn't have clients if we didn't have a license. And so we were the first digital wealth manager to get a license in Singapore. And in Malaysia, we were also the first one. So both the Singapore and the Malaysian regulator were actually kind of very forward-looking in this. And then the second group that, and embraced our proposition as being clients, the ones that took a little bit more time has been investors. So at the beginning, it was actually difficult to explain to people that we thought that people would like to use a fully digital platform to build their retirement portfolios. But that, obviously investors tend to look at numbers. And so as soon as we had enough numbers, because clients were, enthusiastic about our services, that became an easy conversation. But at the beginning, that was not so easy.
So, Michele, how do you see the relationship with the incumbents versus the already well-established financial institution changing with fintechs? And what have been your direct experience?
Look, I think that the incumbents or the banks mostly, will need, and in some cases they are already, invest significantly into digitizing their experience, first of all, so their interface with clients. As I mentioned earlier, I don't think there's going to be any financial services that doesn't have that, and that's probably already the case in a way. But also use technology to improve their what the banks call middle office and back offices, because at the end of the game, otherwise, if you don't do that, you're going to just have a structural competitive disadvantage on the cost side. And I think that obviously there are some banks that are moving fast and try to invest significantly into all of these areas, and will probably come out, as not digitally first, but kind of as close as it gets to digitally first players, and some others that are lagging behind. And I think if you fast forward 10 or 20 years, some of the kind of what you call the fintechs, so the new players that started digitally first, will be established players themselves. Some of the current banks will still be around, will be winners. Some of the banks may not be around any longer, and some of the winning banks will have got there by building stuff, and some others by acquiring some of the new players. But you're going to have a mix of solutions that will be built in different ways. I think we're very early in that journey.
But at the same time, the digital financial services space is also getting overcrowded. Right? Every single month, there are so many new startups that gets announced. Some are backed by the bank, some are not backed by the bank, some are backed by the investors. So how do you see this overcrowded place at this point in time? Does it impact players like you who have been in the game for 4 years and who have a clear path of moving forward, or you don't see them as a challenge at all?
Look, I think you need to look at the micro level, right? So, when financial services is a very broad definition. There is many different companies doing very different things in financial services. And there are areas that are more crowded than others. Also because there is, investors that tend to prefer certain areas versus others. In the areas that get more crowded, I think you will see a few players winning and a few others disappearing over time. Our specific area, so the area of digital wealth management, is not particularly crowded, to be honest. There are a few players in all of the markets where we are, but there's not so many. I think some of the players will thrive and some others will not, and it's just going to be, I think it's great for clients. They have choice and they can decide who will continue to be successful and who will not.
Absolutely. At the end of the day, the more products in the market, consumer is going to be the end winner.
Exactly. The
client, both in form of choice, price point, and the quality of service. Absolutely. Tell us something about your views on fintech in general and this wave of digitization of financial services. What kind of ability it has to bring a real social change? While we are seeing a lot of move today, right, which is towards people, as you said, who are generally going in an offline service, trying to move online with a better service, and that's the traction. But are we really looking at a tide or a change where even the people who are not on our official financial services system can be brought in into this?
Definitely, I think there is many areas of financial services where technology can broaden access. I think wealth building is maybe not the first one, because in general, people that do not have access to financial services have as a primary need other needs. So maybe they need payment services first. And in some cases, they will need credit services. If you think about small SMEs, for instance. But then over time, they'll get to also want wealth management services. In our case, because we launched and we currently have a $0 minimum balance in all of our markets. So in practice, you can open an account with us with, let's say, $10. And with $10, you actually can build a diversified portfolio. While we didn't do that because we wanted to acquire customers that don't have $10. We did do it because our client base is mostly made of white collar professionals, people like you and me. That are starting to think about retirement, start to think about their kids' education. So that's our core customer base. So we decided to go with a $0 minimum balance to make it very easy to test, to try, and to kind of make sure you can try and see whether you like it. But as a byproduct of that, we did see quite a few kind of younger people, that may not have accumulated yet, 10 or 50 or 50 or 100 or $200,000 in savings, but still they are saving a little bit of money every month and they want to start thinking about their long-term goals. And now they can do it. So we are a little bit of a small example in the area of kind of a broadening access. There are definitely areas of finance that are being disrupted more forcefully by technology, where payments in particular, I think, where actually technology can just bring access to people that didn't have access before. And then obviously it differs country to country. If you look at a country like the UAE versus a country like India or Indonesia, Singapore and UAE on one side, and India and Indonesia and others, obviously have very different structure, very different problems, and different fintechs will have opportunities to tackle different problems. In the more emerging markets that are very large, there is definitely the opportunity to extend access to financial services.
Michele, tell us something about what are the challenges for fintechs like you, who have grown for a few years, operating in multiple jurisdictions. What is the real challenge to your growth, if you have to name top 5 challenges?
Look, because we operate in a regulated market, as I mentioned earlier, we are actually regulated in 5 markets. So we have a license in Singapore, in Malaysia, in Thailand, in Hong Kong, and in the DFFC. That means that we need to, follow slightly different rules in different places. And in order to launch a new market, we obviously need the right approvals, and rightly so. It takes time, rightly so, because we manage people's money, and so it's important that the regulator protects our clients, and we are happy about it. But obviously, on the other side, it makes us a bit slower than we would be if we were not a regulated entity. So this is definitely one area that it's not a challenge, but it's part of the game. It's part of the sector where we play in, but definitely slows us down versus unregulated businesses. And then the second area that I want to mention is, and I'm sure you heard it many times, is talent. At the end of the game, we live in a world where there's not enough, people with the right ambitions and the right drive and the right competencies to build all the businesses that people want to build. And so, there is a competition for talent. It's great. It's a great time to be a talented and individual with the willingness to do things, because you have a lot of demand from people, and you're going to have a lot of offers, which is great. But obviously, it does create a challenge for companies that are scaling, and yeah.
Talent is a very interesting topic. You said competition. I actually call it war. It's a war of talent when it actually comes in this area. And we have 2 different fronts to fight. One is about, as you said, identifying the right talent with variety of skill sets that is needed, where technically no one has experience, but needs to have a capability, competency, and a mindset. And the second part is also about how the nature of work itself is changing, and people's expectation of work-life balance is changing. The future of work itself is also a very different challenge in its own way that is coming. So no, absolutely agreed with you. War of talent is definitely one of the key factors in this sector. How about number three, number four? What would you say are your challenges?
I would say that those two are the main challenges that we need to deal with. I think everything else is, it's us getting things done and executing on them, which is, it's not a challenge. It's, it's what we wake up in the morning for.
And Michele, what would be your views about the VCPE market that exists in the emerging economies, which is obviously significantly different from what we see in the Silicon Valley? But what's your view about the Asia side as well as the Middle Eastern side corridor? How is the VCPE market in the last few years, and what do you see going forward?
Yeah, it has evolved very significantly. So in Southeast Asia, for instance, and Singapore in particular, if you compare the venture capital industry 10 years ago, when I first moved to Singapore versus today, very, very, very different. There is way more money that is currently being invested in companies, and that has been a core factor behind the growth of the tech sector in Southeast Asia, and particularly in Singapore. And it's probably not yet comparable to what you see in Silicon Valley, for instance, or in, maybe also in some parts of Europe, but it's now actually, there is enough capital and there is enough kind of smart investors that any entrepreneur that has the right drive and wants to get things moving will find somebody to back them, I think. I think in the Middle East, we're probably a few years behind this. We are, I think, going in the same direction. So I think there is also, if you compare with 3, 4, 5 years ago, there is way more capital than there was 3, 4, 5 years ago, and there is way more talent in the industry as well. But I think that the next 5 years are going to be an even larger change than you have seen in the last 5.
Agreed, totally agreed. Michele, last question. There are a number of aspiring entrepreneurs. A lot of fresh graduates now aspire to be fintech or tech entrepreneurs. And with your life journey and your lessons learned, what are the 3 things you would like them to know as they all go on to this journey of entrepreneurship?
So I think once you decide to go into the journey, I think there are a few things that are paramount importance to know. One is remember that the most important thing you will do is pick people. So everything else is secondary. If you surround yourself with people that are smarter and better than you, then somehow you're going to come out of it well. The idea will change, the sector will change, the competitors will change, the investors will change, etc. But if you have the right people around you and to build a company with, you'll find solutions. So I think people is, I could be provocative and tell you, number 1, 2, and 3 are people, and we stop the conversation here. But I'll play your game a bit better. So I'll give you a different number 2. So I think number 2 is people that are coming from more traditional careers, maybe from consulting, from banking, or from more generalist careers in traditional companies, may struggle at the beginning to the idea that you do things step by step. If you think about, if 5 years ago you told me, hey, can you please build a wealth manager with license in 5 countries, managing excess of $1 billion in the next 5 years, I would have told you, oh, that sounds like very difficult. But if you start from one country, from the first client, then the first 10 clients, then the first 100 clients, then the first 1,000 clients, and you solve problems as they come one by one, and then you go to the second market and you do the same, and then you go to the third market, etc. You need to think about it step by step. When I was younger, I ran a marathon, and same logic. Like you think about, I want to run 42 kilometers, it's going to be daunting. But you think about the next step, and the next step, and the next step, and the next step. 4 hours later, you realize you've done 42 kilometers, and it just happened. And I think it's building a company is, it's a little bit like that. And maybe the third one is building a company is not a linear journey. Don't expect it to go, from point A to point B to point C to point D in a linear way. There's going to be a lot of ups and downs. I know this is something that has been discussed many, 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 many times, But in reality, it's something that is worth repeating as much as possible, as not only to entrepreneurs, but also to people joining younger companies. You know, you need to be able to have the right level of resilience and going through the ups and downs, because even the most successful company on earth, of which we currently know only the good days, you know, they had some bad days and they just came out of them stronger. And that's why today they're some of the most successful companies in the world.
Thank you, Michele. I genuinely thank you for your time today. Really interesting conversation. And I must confess, you're one of the most aspirational persons we have interviewed so far. And definitely your authenticity is key. So I wish you the best and Stashaway the best. And we look forward to seeing you as you climb the ladder of success and hopefully become the world's biggest digital wealth player one day.
Thank you, Bhavin. I appreciate it. And yes, you know, it's obviously we are early days, so hopefully we can now serve also people in the Middle East with the Stashaway app. So definitely looking forward to continue building.